Hello, everybody. So today we have another tough day for growth stocks and hypergrowth stocks in the market. I can only explain this by an issue with liquidity. Something is going on. Growth is being sold off. And, we at HIMS, you may remember HIMS, surprised to the upside. We were all surprised by the HIMS earnings being so good, and the stock dumped. And this is another special case of an outstanding surprise for Q3, raising the guidance, outstanding quarter-over-quarter revenue growth. The numbers look so good for CorMedix. And the initial reaction of the market, of course, was a good one. The stock was up 12 or 13%. And it is in the red. It is in the red because the market is selling off. The market doesn't care about what's under the hood. They just care about tonight and the government shutdown vote. And so this is one of these special cases of a company that is yet again being unfairly punished by the market, and it's been tough for a lot of these hyper-growth small caps to catch a bid. But that's why we're long-term investors on this channel. Anyways, let's talk a little bit about the quarter. So they had much higher utilization of DefenCath by the dialysis customers than expected. Hence, the growth number. The growth number is actually huge. It moved from 39 million to 104 million. Now, keep that in mind. Some of that has to do, well, I guess the 130 would be with pro forma net revenue with the acquisition, but that's the DefenCath sales themselves, right? But it was 88.8 million, and so you're moving from 39 to 88. So you had an enormous amount of purchases from one of your dialysis customers, one of what they're called the large dialysis organization. There's two of them, Davida and Fresnicius. It's probably one of the two who started implementing the product in a big way, and so that's why we have the surprise, and that's why once again, just like in Q2, for Q3, they once again announce that they are raising the guidance between 390 to 400 million. Now, you remember the last time they did that for Q2, the stock popped quite a bit. Well, I guess not today because it's all about the macro and everybody cares about the macro. They announced an acquisition, which I personally liked very much, which was the Melinta acquisition. They're going to save a lot of money, and they're expecting to save quickly 30 million, and the total before the end of 2025 should be between 35 and 45 million. And why do they save, right? Because they have the same distributors, the same sales teams. They create synergies by buying Melinta, which is a company that has anti-infection drugs, just like CorMedix. CorMedix is an anti-infection product. Before I talk about the product and just do a little recap about the product and what the product does, let me just walk you through the numbers as to why this company is so cheap. Pro forma adjusted EBITDA, as you know on this channel, I don't invest for cash flow. I invest for top line growth, which we totally have for CorMedix. But adjusted EBITDA pro forma for 2025 is 230 million. Okay, enterprise value for the stock right now is 820 million. They have no debt, 56 million in cash. So you have $820 million company, and they're gonna do adjusted EBITDA, so proxy for cash flow. They're gonna do 230 million. So this is enterprise value over adjusted EBITDA. What's the valuation? 3.5. Like this stock is trading for cheaper than, say, I don't know, an auto company who's about to go bankrupt or something like that. It's trading so cheap. I don't understand that. I mean, it's just the market is entirely ignoring these companies, entirely discounting them. And this is for a company. You can see in my spreadsheet my current favorites, right? So CorMedix is one of my current favorites. I have low binary risk on there because it's a lot of individual decisions, in my view, that make for the adoption of a product, but also it is a product that is in a specific situation in the sense that it saves money for Medicare. And yes, there is a renegotiation that's going to be going on in January with CMS to figure out kind of like what's going to be the reimbursement rate. Lots of people are saying it's not going to be as high as it was in the past, but how could you not see that this is priced into the stock? This is more than priced into the stock. Even if they get reimbursed way less for the product in the future, not way less, but slightly less, that's, in my view, priced into the stock. Some people are saying that they could be selling those vials for something like 130 or 120, something like that. They sell them right now for more than 200. it's something you can absorb in a quarter, in my view, because this stock is growing so fast. So as a reminder, what does this stock do? This stock, you can see I put a little vial here. This is a solution lock. This is a solution lock for hemodialysis catheters. So what happens is at the end of diabetes, when diabetes gets really, really bad, towards the end, you have to go flush your kidneys at a dialysis center. At a dialysis center, you have to go flush your kidneys. And so you get these catheters installed, and you have to go sometimes twice, sometimes 3 times a week. And you get your dialysis treatment. After you're done, you're sent home. In the past, you would be sent home with the dialysis tubes just hanging out. Now, at least that's what DefenCath is doing. They have this solution where they lock the tube with the liquid, and that solution prevents infections. And these infections, when prevented, they save a lot of money to Medicare, something like $70,000 or $80,000. That's the cost of an hospitalization. So they have an easy time selling the product actually to all of these dialysis centers, because you can see that when they don't use the product, there's much higher deaths and hospitalizations and much higher cost for Medicare. When they use the product, the deaths related to infections drop by 71%. You keep the customer longer, obviously, because they didn't pass away, and you save a lot of money to Medicare. So that's kind of my take on the product, and it's a relatively inexpensive product. Even if they were to charge something like $120 or $130 a vial at some point, it is still a fairly inexpensive product in my view. And this product has optionality, namely there's another very widely used type of catheter, which is TPN catheter, which are feeding catheter for people who have kind of longer hospital stays or go through surgery, they can't eat, stuff like that. So they place them sometimes on TPN. Same thing, they are working on an application of DefenCath for avoiding the infections with the use of a TPN, and that could greatly increase the market size, and that's the main product. And the company, not quite, but nearly doubled in size when they acquired Melinta Therapeutics, which had a very large product portfolio, which is all somehow related to avoiding infections. Like most of its portfolio is antibacterial or antifungal or anti-infection. So they are trying to build an anti-infection therapeutics company, which to me is very interesting because it is a niche. It is a niche. It is also something that saves money. It is also something that medical providers, in the way they are reimbursed, they have an incentive to try to avoid infections. That's a lot of times hospitals are judged like that. Dialysis are judged like that. So I like that story. There's a lot of stories I love in healthcare. But what I love the most, of course, about this stock is that it is dirt cheap. And I cannot possibly explain why this stock is dirt cheap. It's printing a bunch of cash. Unlike a lot of stocks in that sector, if you go on my spreadsheet, I have like 20 different one of them. Many of them have negative EBITDA. This stock is printing a bunch of cash. Think about that. Net revenue in the quarter, 88 million. They're guiding EBITDA of 220 million, right? I mean, this stock generates a lot of cash. Even if you're into things like net income, for example, net income in the third quarter, 108 million, like gap. Like it's like, okay, 1.42 to 1.26 a share. So even if you're into that, it's like this stock prints a bunch of cash, and I don't understand why it's so cheap, because it's growing very, very fast. And anyways, so that's my take on the stock. I don't understand why it dropped. The market had the initial reaction correct in the beginning of a trading day, and the stock gets no respect. Sometimes you get no reward for an investor. As an investor, sometimes you get no reward for doing your homework. As a company, sometimes you get no reward for doing a good job, but it's about the long run, and over the long run, I think this stock will get noticed. So anyways, this was not investment advice. This is not financial advice ever on this channel. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.